Can POL coin lead the cryptocurrency market in the future? What if the next market leader is not Bitcoin or Ethereum, but a chain quietly redefining how blockchains scale, interconnect, and govern? What if it is a coin that most retail investors are overlooking? What if the quietest coin in the room is also the most structurally important for what comes next? In this video, we explore the rise of POL, the native token of the Polygon ecosystem. You are watching Crypto Wayfarer, where we navigate the noise to uncover what truly matters in crypto 2025. And today, we are asking a bold question: can POL lead the next phase of the cryptocurrency market? Stay with us, because what you are about to hear may change how you think about long-term investing in crypto. To understand the future of POL, we must first zoom out. The crypto landscape in 2025 has shifted dramatically. Bitcoin ETFs are live and flowing with institutional capital. Ethereum Layer 2 scaling has become the new battleground. Interest rates are easing after a multi-year tightening cycle, bringing fresh capital into risk-on assets. Altcoin rotations are back, but the winners are different this time. Narratives are shifting away from hype and toward real infrastructure. And that is where POL comes in. POL is not just a rebrand of Matic, it is a complete upgrade. Polygon 2.0 is being built as the value layer of the internet, and POL is its foundation. But what makes POL more than just another token? Let us dig into the fundamentals. Polygon was originally created to solve Ethereum's scalability problem, but it has evolved far beyond that. Today, Polygon is a network of zero-knowledge-powered chains designed for seamless interoperability. Think of it as an internet of blockchains. Each chain in the Polygon ecosystem is secured by POL and can tap into shared liquidity, shared tooling, and shared governance. POL is the coordination mechanism for this multi-chain architecture. It is used for staking, governance, and restaking across multiple chains. This means one validator can secure multiple Polygon chains by restaking their POL. That is powerful, but wait until you see what happens next, because POL is more than a token. It is a strategy to align security, utility, and community incentives across an entire modular ecosystem. Institutions are starting to take note, and this brings us to the smart money angle. Polygon has received funding from top-tier VC firms. This includes Sequoia Capital India, SoftBank, and Tiger Global. More importantly, it has formed high-profile partnerships. Disney, Starbucks, Reddit, Nike, and Meta have all built on Polygon. Why? Because Polygon delivers low fees, fast settlement, and Ethereum compatibility. Developer traction is also a key indicator. Polygon is consistently ranked in the top 3 for active developer counts across all Layer 1 and Layer 2 ecosystems. This signals long-term health, because when developers build, users follow. And this is a long-term game, but it is not all smooth sailing. Let us talk risks. Like many crypto assets, POL is subject to volatility. The token is still transitioning from Matic, and that introduces complexity. Not all exchanges support POL yet, and token unlocks are scheduled over the next few years, which could impact price. Market behavior around altcoins also tends to be sentiment-driven. During corrections, even strong tokens drop. And let us not forget regulatory uncertainty. While Polygon Labs has worked proactively with regulators, the global landscape is still evolving. These risks matter, but so does the upside. And here is where the POL thesis gets compelling, because this is not a meme coin chasing virality. This is infrastructure, and infrastructure is sticky. If POL captures just a fraction of Ethereum's transaction volume across its Layer 2 chains, its valuation could expand significantly. In a bullish scenario, we could see POL become the go-to asset for staking and governance across hundreds of chains. Its restaking model unlocks exponential validator rewards, and its treasury can fund growth for decades. Bearish scenarios, on the other hand, would likely involve failure to attract developers or fragmentation in the ecosystem. But current metrics suggest the opposite. Polygon CDK is being used by multiple projects to launch new chains. The modular thesis is catching on, and POL is positioned to be at the center of it. Let us talk expansion. Polygon is already integrated with major Web3 applications. From DeFi to NFTs to gaming, the ecosystem is broad. But now, with the advent of Polygon 2.0, cross-chain messaging, and shared sequencing, the network is evolving into a fully interconnected protocol suite. POL is designed to be future-proof, with architecture built to integrate seamlessly with upcoming Ethereum upgrades like EIP rollouts and support dynamic on-chain governance without hard forks. It supports upgrades without hard forks. For example, it enables validators to restake across new chains without altering protocol logic. It enables horizontal scalability, and it aligns incentives between validators, developers, and users. On the regulatory front, Polygon Labs has taken a compliant-first approach. They have engaged with policymakers, and POL is designed as a utility token rather than a speculative asset. That matters in 2025. Because regulators are watching, community governance is another key pillar. POL holders will eventually govern protocol upgrades, treasury allocations, and ecosystem grants. This level of decentralization is critical for long-term sustainability. The Polygon treasury itself holds billions in assets. These funds are being used to bootstrap ecosystem growth through grants, developer programs, and strategic investments. Unlike projects that rely on hype, Polygon is funding real builders, and that creates organic growth. So, can POL lead the market? Let us bring it all together. This is not just about where the market is now, but where it is going. POL is not reacting to change, it is architecting it. POL has strong fundamentals. It is deeply integrated across DeFi, NFTs, and enterprise blockchain. It supports real-world applications. It is backed by institutional capital. It has a clear upgrade path and a multi-year roadmap. And it is built on principles of scalability, decentralization, and long-term alignment. In a market that is increasingly focused on utility over noise, POL stands out. It may not be the flashiest token, but that is exactly why it matters. Because when the hype fades, infrastructure remains, and POL is infrastructure. Now, the final takeaway. POL may not lead in daily headlines, but it is leading in architecture. It is setting the standard for what a post-Ethereum multi-chain world could look like. And that makes it one of the most strategically important assets to watch in crypto 2025. What do you think? Is POL undervalued, or is the market underestimating its long-term role? As Polygon transitions from Matic to POL, do you think POL will outperform Matic and become the dominant token in the ecosystem? Let us know in the comments. Do you believe Polygon will reshape the future of Web3? Drop your thoughts below. And if you found value in this breakdown, like the video, subscribe to Crypto Wayfarer, and join us as we decode the future of digital finance. Stay sharp, stay strategic, and keep wayfaring.